So we're in a day and age now with AI and tech that's revolutionizing the financial system. And it's important that us as investors stay at the forefront of this revolution. So as for myself, coming from a day trading background, having to build out messy spreadsheets, taking months on months to backtest strategies, it just makes most sense for me to be building out systems that can execute in any market conditions with different risk appetites all simultaneously. So that's what I'm going to show you in this video. Let's quickly dive in. So building AI and algorithmic systems that can generate income. So this is the reason why I shifted away from manual day trading into automated data-backed capital systems. To be trading one trading account, to be trading one strategy, one market is just not the way to build real yield and consistency anymore. So with manual day trading, it does have limits. As much as I love manual day trading, you are basing everything on your emotional decision making. You're basing it on screen time dependency. You have burnout and inconsistency. You have a human bias that destroys discipline. And most traders never build scalable systems. So my profitability and my consistency is based at one, me being at the desk, but also two, me being at peak performance in order to execute consistently. Now, we all know how life goes. We always have external factors that hinder our performance, and that's why scaling has just been tricky for most of us. So I realized that I didn't want to trade harder forever. I just wanted systems that could execute intelligently without constant emotional involvement, ways that I can trade different markets, different risk appetites all simultaneously, and I didn't need any of my emotional involvement. Also, I'm quite an emotional person, as all of us humans are. So to have a data-backed model that can execute ruthlessly with no human error is quite powerful if you know how to use it. So why I transitioned into algorithms? The biggest shift in my financial journey wasn't learning another strategy, but it was understanding that real scalability comes from structure, automation, and of course, repeatable systems. So over the last couple of years, I began building systems that can execute, backtesting, automating, refining, running on demo, and then scaling onto live trading accounts. Systems that can execute with no emotion, follow strict data rules and strategies that we implement, and then obviously operating across different market conditions, scaling beyond our own time. And that's what created not just time freedom, but also location freedom. So what exactly is an algorithmic system? I mean, pretty basic for the guys that don't know who are new. An algorithmic system is simply a rule-based system designed to execute decisions automatically based on data. So say, for example, you have a strategy, it's a rule-based. If this happens, the algo will do this. If that happens, the algo will do that. It's no emotion involvement. It's more about if and then statements. It's more about if this happens, it's going to do that. So there's no fear, there's no greed, there's no guessing, and the system follows predefined logic. Also, we're in a new day and age now. You can backtest a strategy and prove that it's consistent and prove that it's profitable without even putting it on the live markets yet. So yes, you have to backtest the system to prove that it's profitable. That doesn't mean that it can be profitable in current market conditions. So that's why we always backtest, make sure that the criteria is met, then put it on a demo account in current market conditions and make sure it can perform that way. So this essentially allows consistency, discipline, and then of course scalability that most manual day traders or investors struggle to maintain long term. So first we build up data, we then refine the strategy, we then deploy execution, we then refine risk management by scaling on different sized trading accounts, which then obviously produces results. So the real edge isn't prediction, it's building systems that can survive long enough in order for your account to compound. Most people are just chasing the next trade idea. I'm focusing on things like risk adjusted returns, data backed execution, portfolio structure, which is major in this. There's no one strategy that you can just deploy and now all of a sudden it makes money for the next 10 years. It doesn't work like that. It's still strategic asset allocation. In a portfolio, you want to have different strategies. If one doesn't do well, you can have others that can offset that risk. That then produces long-term scalability. And of course, most importantly, is controlled downside exposure. Just because we have a strategy that can make money and that's profitable doesn't mean it doesn't have risk. Market conditions change, cycles change, strategies don't perform in certain cycles. So yes, it is passive, but that doesn't mean it's just plug in and let go. It's understanding when to deploy certain strategies, when to reduce risk on others. So live system performance, essentially what we do is we've got four broad main strategies that we're trading. Momentum trend following, basic strategies that are executing basic breakout systems. We've always found that the strategy, the more simple the strategy, the more consistent. And the system focuses on identifying strong trend continuation opportunities and using structure and key levels as confirmation. The second one is more of a scalping and price inefficiency algorithm that essentially capitalizes on short-term market inefficiencies, executes really, really quickly, something that humans probably can't do and definitely can't do consistently. So that's an edge that we can exploit, especially when we see profitability long term. And then indicator alignment. Sometimes we have a look at a couple indicators, whether it be RSI, Bollinger Bands, MACD, and if a certain criteria is met on all three or four of these indicators, the algo can execute the position, and then obviously, based on predefined risk-adjusted criteria, will then manage the risk. And then the fourth strategy is grid systems and martingale. Now, these are a little bit more riskier because of the nature of the risk management system. Essentially, what it does is that it sizes into losing positions. Now, we do make sure that one, the account size is sufficient enough, we have enough margin in the account. But a lot of our top performing strategies are actually martingale. So if you know how to use these type of strategies, they can become very, very valuable in your portfolio for the simple reason of not just the strategy that's really good, but the risk management system that's really, really powerful. The way it sizes into losing positions and the way it simply recovers losses is powerful, and I would highly suggest having at least one of these strategies within your portfolio. So in terms of like client results, of course, I'm not the only one doing this. I've got a whole team that's building out systems and that's testing systems. I've also got clientele that's using the systems. And I mean, here's just a couple of the guys. Victor, that's doing really well on his accounts. This strategy's up 73% on his account. This is a small deposit, $500, up $357 already. And this was just the beginning of this month. And Scott also doing really, really well. He's got a multi-strategy allocation. He's got a couple different strategies put into a portfolio. His equity curves looks nothing like what you're going to find from manual day trading. So yeah, he's also super, super happy, starting off on a pretty decent sized account, $1,000. And this is just one of his strategies. And of course, he's got a couple others running too. This one doing really, really well. And once again, we've got tons and tons of testimonials and track records and performance that we can go through. A lot of these guys are working closely with me, building out portfolios, so that way they can manually day trade on the side, focus on that, but building up a allocation of systems that are more passive. So that way, one, they don't have FOMO when executing on the manual side because they're not constantly chasing to be involved in the market because they're always involved anyway. So there's no need for them to be putting unnecessary risk on. Manual day trading is still cool because I can choose my risk. I love the whole idea of waiting for price to come into key levels, executing, managing my own size. But there's just a different sort of architecture that comes with building up a portfolio of different strategies in different markets. I find that that's where my most profitability and my most growth has been. And I'm sure my clients can say the same. But why does this matter beyond money? So one of the biggest benefits of systematic investing is, of course, freedom. So it's not just financial freedom, but freedom of time, freedom of location, freedom of just simply sitting at the desk watching charts. I think once again, as much as I really have a passion for sitting at the desk and watching charts and markets, I find that spending 2-3 hours trading a session, I can honestly do a lot more. I can have a lot more leverage in different areas or different businesses of my life, whereby I can start leveraging my time off the desk while I'm still allocated towards strategies, which I can then use to build different things. So these systems have allowed me to travel, study, build businesses, and focus on bigger opportunities while maintaining structured market exposure. So as much as I've been spending less time at the desk, I've been more allocated and I've seen more growth. So it's counterintuitive to say, oh, well, I'm spending less time on the charts, but I'm actually seeing more results, which is major. So not only it's provided location and time freedom, but I can do things like build other businesses. I can study. It allows me to travel, which I am now currently in Southeast Asia. And I wouldn't be able to do this, at least with less stress, if it weren't for these different systematic investments that I'm making. So let me not emphasize this. This is not for everybody. This isn't a get rich quick scheme. It's not for people who don't have any income and now they want to start investing. It's not for people who are trying to get from 0 to 1. This is strictly for people who have capital that they want structured on more of a professional basis. They want exposure to data-backed systems. They prefer longer-term strategic thinking. They value automation and understand intelligent execution. And they understand risk management matters more than hype. They also understand that with these good returns come risk, and they're not emotionally attached to a trading account. I've just found that the best clients I have are the guys who already have their longer term portfolio set up. They've already got their tax-free accounts maxed. They already got their S&P 500s. They've got their crypto allocations, whatever. This is the perfect form of diversification. It's the perfect form of building up a more active portfolio. If you're not looking at it from any of these ways, chances are it's not for you, or it's not for you just yet. So this system's designed for serious individuals who already have savings, they've got capital, they have structured financial foundations in place already, and they're not just beginners looking for hype or quick wins. They want to be part of the AI race, or they're looking for some get rich quick scheme. So it's for people focused on good asset allocation and just modern investment systems, guys who want to be abroad on this AI revolution. They're not looking at these old 60-40 portfolios that worked back in 2011. Times are changing, the financial system's changing, and I'm just showcasing what's working for myself and my clients. So yeah, this is the future, guys. So finance is evolving. AI, automation, we got these softwares that we can start using, and it's changing the financial capital management ecosystem as a whole. The next generation of investing won't be built on emotional reactions, but it's going to be built on automation, AI, data, systems, and strategic portfolio management. And the people who adapt early position themselves ahead of the curve. So if you guys are serious about building long-term wealth, accessing data-backed systems, learning modern capital strategy, and obviously positioning yourself for the future of finance, if this type of stuff excites you, if you think that you can resonate with this, and if this is something that you would like to look deeper into, DM me the word systems, or simply just join my Telegram. It's a free public Telegram where I show more information on the strategies I'm using, how I'm building out systems, and just basic updates on what exactly I'm doing and how I'm looking at the markets. You can check the link, it's in my YouTube bio. DM me the word systems on Instagram. And of course, this isn't financial advice, it's just educational content. And with that being said, I'll see you guys on the next video. Cheers.